Hello everyone. Hope you're all well. Time for the weekly update. So last week we did an update on Friday as planned, and because of what happened over the weekend and on Monday itself, we did another update. So we've had two in 1 week, but now yeah, it's in the week, and I suppose let's see where we stand. What has happened since the big pullback that we had over the weekend and on Monday in general markets and the crypto market. Try and see what the outlook looks like for the crypto space, the macro environment, how Bitcoin's behaving, and what might happen next. So, with that, I'm just going to go straight into sharing screen and I suppose get a quick overview where things are at. So, you can see here with the likes of Bitcoin, for example, it's made a decent recovery in the last 24 hours and even, I suppose you could say, 48 hours. But, it's up about 5.5%. But overall, in the week, it's still down nearly 6%. Likewise, you can look at, like I said, Ethereum, good recovery, 7.5% up, but still down over 16% in the last week or so. And again, you can go through, the various different ones here, and you can see, the general view. But of course, Bitcoin is the market lead, and what Bitcoin does, the rest tend to follow in general terms. And so let's have a look at what Bitcoin has been doing. So here's the hourly candle. You can see here, over that phase of pullback over the space of 3 or 4 days, it went as from sort of 65,000 down to 49,000. So, pretty significant pullback, and, a pullback from all-time high from, sort of 72 to 49. That's a significant pullback from, all-time high to local low. What's happened since, you can see in general terms, again, it's been in a general upward recovery trajectory. And if we pull that back into the 4 hour, you can get a clearer picture of, where it went from, in the space of a matter of days, and a decent recovery put in. And then if we just pull it back into days, you can see the overall channel. So you can see that this has been going on now since the end of February. A sideways motion could be seen as boring. But in general terms, that stay between that sort of 60 to 70 mark. When it pulled back to here on the update that I did, then that on a couple of different TikTok and YouTube channel videos, short videos, I did say that I believed that it would probably, and this is when it was down at $50,000. I said I do believe that it would go between the 60 and 62,000 mark, because that's the next sort of zone where there's been a lot of traffic, a lot of resistance, both for when it was trying to come down and now that it's trying to get back up. And it's done exactly that. It's gone to about the 62,000 mark. It's now, jumping. It's been as low as 60 and as high as just over 62. So exactly what we had sort of predicted on that. But where to from here? Well, of course, that'll depend on the market. Is the news positive enough in the crypto space to drive this above and beyond the 62 mark and use that again as support? Or will this be resistance and we start to see it come back down? If it hits a resistance, and this is seen as a resistance, there's every chance this can come back down and, depending on the news that's out there, hit a new lower low, a local low, which has the potential to bring to 43K or even 38K. And of course, if that were to happen, altcoins would get another wrecking. Or of course, it might just hold this zone, go sideways for a little bit, build a platform and move upwards. What's likely to cause it to go either way? Well, the general news in the crypto space is really positive and has been. And even prior to all of this, I was saying the news in the crypto space. And in fact, I've been saying it for quite a few months, that the news and the setup and the foundational setup and values for Bitcoin and crypto in general is extremely positive. We have companies, governments, institutions, banks, all now talking positively about Bitcoin, something we could have only dreamed of a few years ago. So the external, institutional, big money interest in crypto is certainly growing, and in the long term view, that certainly would see to be positive. And so, some people, when they see some of my videos, are saying, yeah, in the short, we're going to have potentially the biggest bull run we've ever seen. But it's what happens in between. And so let's have a look at, I suppose, the positives and what's happening out there in the crypto world that can be seen as positive news. So, as an example, Putin has just made Bitcoin mining in Russia legal. He's legalized it. This is a huge positive step to how crypto is going to be seen in Russia, and can only be a positive. It wasn't that long ago they were trying to get rid of Bitcoin miners in the country. So that's a huge positive step. Um, Japan's version of MicroStrategy, who now own nearly 1% of all Bitcoin in circulation. And Michael Saylor, it's the CEO. Continue to develop this overall policy of just buying more Bitcoin all the time. Metaplanet, which is I suppose Japan's version of MicroStrategy, have bought another 6.8 million of Bitcoin in their Bitcoin strategy. We're now seeing more and more companies starting to adopt a Bitcoin strategy where they start using some of their excess cash and buy Bitcoin as a sort of a reserve within their business. And so that can only be positive in the longer term for Bitcoin. Again, you see the likes of countries doing the same. I mean, in the US alone, all the candidates now are coming out saying, we should have a Bitcoin strategy. We should have potentially have it as part of the reserve fund, etc. So again, it's a real positive swing towards the overall story of Bitcoin and certainly the long-term version of it. On top of that, you have Morgan Stanley, who have 15,000 financial advisors under their roof, and they are now have been given the green light to start advising and promoting Bitcoin ETFs. This is massive. They're controlling about 6 trillion in assets. So again, massive positive news for crypto. We have some of the top crypto execs in the US meeting at the White House with some of their top senior level executives there, where they have been explaining to them what damage they have done so far and what they need to do to make the US more crypto friendly, as they're damaging and damaging the US standing within it. And again, this can only be a positive thing. They're obviously now listening and wanting to see what they could do in a positive manner. So the Biden administration would be seen as being extremely negative towards crypto for the last almost 4 years. And now it appears that they're trying to learn a little bit more and see how can they be seen to be more positive. Whether they are or not, it would remain to be seen. There's more and more banks now coming out with Bitcoin ETFs, the likes of Wells Fargo and others. So this is all a really positive story for crypto. So why is crypto struggling so bad? Why has it had such a huge pullback? Why is it struggling now to even regain its position above 62,000? Well, because there's an awful lot of negative economic news that's out there. And a lot of the things that we pointed towards that has caused that big pullback, a lot of those are still on the table. As an example, is there going to be a war in the Middle East? It's very much still on the table. Will there won't be? Who knows? But it's still very much a very significant risk. The market has shown that when there is some negative news, and it appears that a lot of people are moving towards the, what happened with the Japanese run rate and what has been happening there, and I'll go into that a little bit more, that was the explanation behind the big pullback. But it just goes to show one piece of negative news was be able to bring Bitcoin and indeed the traditional markets crashing down over the space of 24, 48 hours. So it is still very much a brittle market out there. The overall US economic news is certainly not positive. And then many people look towards rate cuts that are pretty much seen to be guaranteed now in September. They're talking about what size rather than if it's going to happen, and whether it's going to be 25 basis points or 50 basis points. Some people are calling for 75 basis points of a rate cut, because and of course, rate cuts usually is very positive towards risk assets, which of course the stock market is and crypto is. But will that really be a positive thing for crypto in the short term? Well, this whole carry that's been done in the Japanese, for people that might be up to speed on what that is, basically for the last 20 or more years, you've been able, if you have an account in a Japanese bank, you're able to borrow money at zero interest. So it was pretty much it was costing you nothing or almost nothing to borrow money. So of course people were borrowing as much as they were allowed to get borrowed, but you're borrowing in yen, convert it to dollars, and then the majority were then taking a lot of those funds and buying into could be gold and silver, it could be the stock market, it could be US Treasuries paying sort of 5% guaranteed. So you're borrowing it at zero interest rate, making 5% with somebody else's money, and you're getting it for free. So that was huge. There's $4 trillion in that, what they call a carry trade. So there's a huge amount of money in treasuries, the stock market, crypto, from this, borrowing it for nothing, getting, in some cases, guaranteed returns of 5%. And then, of course, whatever upside they might get in the stock market or crypto or elsewhere. So what changed? On the 11th of July, the Japanese bank announced a 0.25% increase in interest rate. So now it's no longer free. But you might think, well, 0.25% isn't that big a deal. Well, it is, because a lot of people would have been leveraging it. And so what seemed small became big. And so a lot of people were going, okay, it's no longer free. I'm now not making as much as I was from the trade. I want to unwind. I want to sell out of this trade. So some of the people in that position started selling out of some of their assets, of course, selling it into dollar, and then that dollar buying yen to repay the debt. So what this was doing was, number one, it was causing a big sell pressure in a lot of US-based assets or dollar-based assets. On top of that, because there was so much dollar buying the yen, it was weakening the dollar versus the yen. And so it was becoming more expensive for people to pay back what they had borrowed. So not only now had they the new interest rate, but they also had about a 10% swing in the exchange rate. And so then it made it happen even more so, because people were trying to get ahead of that and sell off more quickly, so that the exchange rate wasn't getting even worse, to allow them to try and sell this off. So now the Japanese have come out and said, okay, we're not going to, they had planned on raising rates more again, and they're saying, okay, we're going to hold off until there's a bit of stability here. So now, if a 0.25% interest raise in Japan caused this much panic in the market, what happens when they do it again? And they're planned to do it again. They've just said they're going to hold off for now. But what happens at the same time if the US reduce rates, which is absolutely the plan, and most believe it's guaranteed for September? It's only a case of how high. Will it be 0.25? Will it be 0.5? Will it be 0.75? Now imagine if they reduce it by, let's say, 0.5, twice as much as what the yen had increased, or the Japanese banks had increased. Now, let's say they increase it by 0.25 at some point, maybe not at the same time, but at some point. Then it's what you're earning over here is decreasing by, let's say, 0.5%, and it's increasing by another 0.25%. And there was mayhem in the markets with just the 0.25%. Are interest rate cuts actually going to be good for risk on assets? And I believe the answer to that is, in the short term, no. Long term, yes. So there's a lot of macro risk out in the market still, huge, between the likes of potential wars. We've seen how fast the market can drop. Economic numbers in the US, and I'll go through a few of those right now. What's happening in the uncertainty prior, on the run up to an election, the US election, the unemployment figures rising faster than expected. There's a lot of risk out there. Add into all of that this: US household debt is rapidly increasing. It has increased in the last month by 109 billion, bringing the total debt to 17.8 trillion. This is a huge, huge amount of money. All debt is increasing. Mortgage debt is increasing. It's about 12 trillion of that. Credit card debt is at an all-time high. I was talking about this literally about a month or two ago, that it hit 1 trillion for the first time. It's now 1.14 trillion. It's gone up by another 27 billion just in the last month. Car auto loan debt has increased by another 10 billion, and that's at 1.63 trillion. So debt and more debt is now moving to delinquency. In other words, that it won't get paid. Mortgage debt, car loan debt, credit card debt. This obviously is going to cause problems for the likes of banks. And as liquidity potentially drives up within banks, less money gets lent out to companies. An awful lot of the companies are what they call zombie companies. They can't continue without redoing their debt, reborrowing. They borrow more debt to pay off all debt and keep the company moving. And so there's more and more bankruptcies happening. They're all in the increase, bankruptcies and foreclosures. So as you have all that going on, and you have unemployment increasing, when you have unemployment increasing, you have less people that can buy. When you have more and more people hitting the absolute levels of debt that they can manage, and now there's more and more delinquencies and bankruptcies, that's less and less, again, more people that can buy. And so the overall spending of the consumer reduces. The consumer spending is a massive percentage of the overall US economy. At the same time, if there's less spending going on, companies will have to lay off more people because they won't be making as much money. let more people, you see where this is going, more people being left off, more delinquencies, more, and then banks themselves having less money to lend, and it just ends up in a spiral. So there's an awful lot of factors that are pointing towards a recession soon or very soon. JP Morgan has moved their percentage chance for a recession from 25% up 10% just last month to 35%. So they now believe there's a 1 in 3 chance of us hitting a recession. I personally believe it's already there. So when you have all that happening, and even some of the positive news in the macro events, what a lot of people are relying on is, oh, the rate cuts will solve everything, and soon after that they'll start printing. I believe with all the uncertainty running into the election, with all the debt that's out there, with all the issues that's causing, with the prices rising in just about everything, it seems very difficult to me how the market can continue on as it is. And so I still believe that there is another pullback to come. And so I've been talking about a big pullback all along. A lot of people contact me and go, well, was that it? Was that the one you were expecting? And absolutely, 52,000 was the marker I was talking about. It went as low in a flash down as far as 49, balanced around 50 to 52. And now it's made its way back up to the 60 62 mark that we had said. But where to from here? Personally, and of course, not financial advice. I'm not a financial advisor, but based on taking everything into account, I still believe the long-term view for crypto is extremely bullish. But in the short term, there is the potential for another pullback and even a lower local low. If that were to happen, how will you feel? How did you feel in the last pullback? If you were looking at the markets and going, oh my God, this is going to destroy me, I won't have enough money to do X or Y, what am I doing? Well, then maybe you should consider your options on this bounce up and consider, are you in the right assets? Should you be in crypto at all? Have you put too much into the market? And you need to look at your overall portfolio and decide, have I too much in the market? In what I have in the market, am I comfortable? Am I in the right assets? Have I gone too far out the risk curve? Would I be better off with just Bitcoin? It's whatever suits your portfolio. You have to decide. But overall, in the long term, if you don't have too much money in the market, if you're happy with what you have in it, and you don't need that money next week or the week after, well, then I would certainly think, with a long-term view in mind, hold what you have. I certainly wouldn't be recommending selling out now, or certainly not in the last few days. But if you need to reposition yourself, now could be the opportunity to do that. Don't get me wrong. We could go to the moon tomorrow. We could have all-time highs next week. I don't know. But all I'm saying is, if you're in a position where this is causing you far too much stress, or it's a problem for money that you need next week or next month, then I would strongly urge you to look and see, should you be repositioning or reallocating or taking money out. But if you have a longer term view in mind, do I think most cryptocurrencies, at least good cryptocurrencies, will be higher in a year's time than they are right now? Yes, I do. Do I still think there's the potential for a big pullback? Absolutely. When will all this happen? Of course, nobody knows. We could, like I said, take off in a positive direction tomorrow. We could have another very serious pullback. We could have a lot more sideways to come over the next couple of months. But as I touched on in a previous video, traditionally from when the Bitcoin halving happens and when we go into the banana zone, a term Raoul Pal has been stating, it has taken this time and longer. And in each one of those, we've had significant pullbacks during the boring piece, which is the sideways action we see right now. But after that, what has happened traditionally in the last 4 has been massive upside. So the point is, if you have the long-term view in mind, then I certainly believe it's highly likely that you're going to have a very positive outcome if you're in a position to hold, or for some people that have dry powder or more funds on the side, it's worth having a look at what might be available right now, or certainly would even more sensible a few days ago. But is there another big pullback to come? Maybe so. And so that's where the DCA idea comes in. So I just want to share one last chart, and this was up in, I think it was a Raoul Pal chart, but I just copied it into a document. If you look on the left-hand side over here, this is 2011. So one of the first runs in Bitcoin following a halving. And you can see there's a big up and then it's sideways. And you've got this, what they call the boring zone here. And there was a 27% pullback during that boring zone. And of course, there's many huge pullbacks through every bull run. And then you can see what happened after that. It went into what he calls the banana zone. And you can see the massive, massive growth during that time. Again, you can see something similar here in 2014 to 2016. You see that boring zone, a minus 38% pullback during that, just before it goes into the banana zone. Likewise, 2019 to 2020, same thing, minus 20% pullback. And off we went to the races. Now, his suggestion is this is where we are in this 2024. We're in this sideways zone that we've been in for about 5 months, minus 27%. Does it come further? Can this come back further? Could it become a 30, 35, or 40%? It was 38% back here. Is it possible? Of course it is. Or, like I said, it can just go sideways for a little bit longer and potentially hit this banana zone again. Of course, the banana zone isn't guaranteed, but most people in crypto would suggest that they believe in it. I certainly believe in it. But I believe we have more sideways action to come and potentially another big pullback. So proceed with caution, but certainly, I suppose my final thoughts is this. If you still believe in crypto overall and believe that, for example, there's a really big upside to come yet, well, then you don't want to be selling out of your position unless you absolutely have to. Selling out on big pullbacks generally doesn't tend to work out well, in the same way as buying into banana zones also doesn't tend to work out well. So if history is to repeat or even rhyme, it would suggest that we have a bit more sideways action to come. I believe you look at the macroeconomics, there's another big pullback to be had. You have the uncertainty moving into the elections, but the elections are now only about 3 months away. Once we've had the elections, that uncertainty should dissipate and open the door for more rate cuts, money printing. And I believe we've got through the Japanese unwind, which I think will happen in between, then the door is wide open for that absolutely major push. Will any of this happen? Nobody knows for sure. But certainly, it's my thesis that we could see a lot more sideways action for the next few months. But once we get past the elections, or we're sure who is going to be elected, I think it really opens the door for very big upside. Time will tell.